to never seen before extent, countries around the world have been faced with either widespread destruction of productive capacity or massive increase of public spending to mitigate the health crisis. What is your take on the situation?
Well, thankfully, as we talked about before, things are getting better, but we haven't fully recovered.
Mm-hmm.
That's a very good way of summarizing it.
Mm-hmm.
And our recovery, as you've highlighted, has been helped by the willingness of governments to act with size and speed to buffer the consequences of the economic byproducts of the pandemic.
Mm-hmm.
Many economies in many places around the world were virtually shut down for periods of anywhere from several weeks to, in some cases, several months. And while a lot of business can continue as we are virtually, there are other forms of business that cannot be done when people are confined to their quarters. And that has resulted in a lot of job displacement.
Mm-hmm.
So in Europe, of course, that typically means that government support will keep people on their payrolls and they won't be counted as unemployed, but they're being paid even though they're not working. Countries like mine, people are displaced from their jobs and they apply for unemployment benefits through our government. The impact is the same, and that is a lot of dislocation and a lot of risk to businesses, small and large.
Mm-hmm.
So taking, a great example, the travel and hospitality industry shut down almost completely.
Mm-hmm.
And all of the data that I see indicate that it is perhaps recovered to maybe 40, maybe 50% of where it was. And that's a lot of unused airline seats. That's a lot of unoccupied hotel rooms. That's a lot of restaurants and historical sites and amusement parks that are not being visited, sporting events, concerts, the whole economic infrastructure around that.
Mm-hmm.
And then the ripple effect, obviously, is that the people who have lost their jobs struggle to keep up their debt payments and et cetera. So, Bosjan, what I would tell you
Mm-hmm.
is I was taught that debt is something you should take on only infrequently and pay back quickly.
Mm-hmm.
But I think that the debt taken on by governments to counteract the pandemic is probably a wise choice, because if governments had not stepped up,
Mm-hmm.
the economic destruction would have been so much larger
Mm-hmm.
and recovery would have been so much harder that in the long run, the national budgets may have been even worse.
Mm-hmm.
So at least in going into debt, the debt might have a return in better growth, and that better growth will help pay back the debt.
Do you have any current numbers on the debt increase for the United States pre-pandemic?
The best resource, by the way, for our national figures is our Congressional Budget Office,
okay,
which is, I think it's cbo.gov.
Mm-hmm.
They do very good work and it's impartial, so there's no politics involved. But just to give you a sense, by the end of this fiscal year, our fiscal year ends this month,
mm-hmm,
our debt to GDP ratio will be above 100%.
mm-hmm, yeah.
That's the first time since the end of the Second World War.
Mm-hmm.
So 75 years.
Yeah.
It is
How
also
many
at
points is that above the pre-pandemic level? 15 or 10?
Yeah, I think it's somewhere between 8 and 10.
8 and 10. Uh-huh.
Yeah.
Okay.
This is significant because several countries that have had debt crises have had debt levels that are a little lower than 100%. Now, for the United States, it's different than it is for an emerging market.
Mm-hmm.
We have the world's reserve currency.
Mm-hmm.
We have not seen any hesitance on the part of investors, either here in the United States or globally,
Mm-hmm.
from buying treasury securities. So financing the debt has not been hard.
Mm-hmm.
I think for me, the biggest worry is Where does it go from here? If we recover, is it going to start going down? Well, the answer, unfortunately, is no,
Mm-hmm.
because our long-term budget picture is also a little troubling, as it is for other countries, because of the aging population, which is going to be drawing more on retirement and medical benefits,
Mm-hmm.
and there are fewer young people making that up.
It is inevitable that sooner or later governments will have to confront the debt pile, and none of the measures seem to be without significant burden on GDP, like spending cuts or tax increases, as well as political costs. Is perhaps widespread inflation increase the most likely scenario of lowering debt burden, or?
No, that's a great question. So we wrote an article on this. I'm getting a lot of questions from my clients. And again, Northern Trust, as you probably know, is a global organization.
Yeah.
So we have substantial operations in Europe, Australia, Asia. I'm trying to think of all the places I used to fly, but I've been grounded for the last.
Americas, obviously.
Hard to remember.
Yeah.
So I have gotten a lot of question because those of us who learned economics know that if there's too much money chasing too few goods, you get inflation.
Yeah.
I don't think it's as much a worry this time around, and here's why. Around the world, and this is evident in the data for the Eurozone, the United States, and the UK, a lot of the money that the central bank has pushed out is not circulating at the same speed.
Mm-hmm.
Banks are holding extra reserves because the credit environment is uncertain.
Mm-hmm.
Household saving in a number of different markets is also up. Mm-hmm. So the precautionary steps that are being taken has prevented an excess of demand that can be inflationary.
Mm-hmm.
In addition, inflation around the world, at least in developed markets, was well below target. So most central banks have a 2% target, as you know, and most central banks were having a very hard time getting inflation up to that level. And the reason is technology, which is making things less expensive, including e-commerce. So it's a lot easier for you and me to shop around for a good deal on something online. Mm-hmm. And the number of products and services that you can get online is expanding every week, I think. Companies are becoming much more efficient in the way that they can deliver goods and services. I would add globalization has also brought down inflation in a lot of ways. And I think that many of those trends, with the possible exception of globalization, are probably going to get stronger in the years ahead and push inflation down further. Mm-hmm. Okay. So the other thing I point out, and sometimes I get pushback here, is that central banks, I think, are willing or want a little bit more inflation than we have today. Mm-hmm. But what if inflation did get, let's say, to almost 3%? What central bankers would say, from Madame Lagarde to Jay Powell to Andrew Bailey and others, is, well, we know what we would do. We would raise interest rates. Mm-hmm. Well, the politics of that, I think, are going to be a little bit difficult. I don't think they'll have to make that decision for a few years, but the politics around that would be very difficult. Mm-hmm. So the conclusion that I reached in the article is that we're much more likely to have deflation than inflation in the next few years, just because the economic damage of the pandemic mm-hmm. is going to take a long time to reverse.
There have been numerous situations in history when massive indebtedness have burdened economies and political systems. According to some measures, the global debt burdens are already similar to Napoleonic times or post First World War time. Can you draw any parallels to similar historically significant events?
Congratulations. I had not gone all the way back to Napoleonic times, and while I'm getting old, I don't remember them firsthand.
That's what I'm told.
So I think the general point is important. When debt burdens increase, your flexibility decreases because mm-hmm. you have an obligation to your creditors. Mm-hmm. And but I do think that it's a different situation for emerging markets than it is for developed markets. Mm-hmm. Because it's much easier for a smaller market to lose control of their destiny um, if they can't control their currency, if they can't control their capital flows, if they can't control their interest rates. They end up in a situation, for example, like Argentina,
Mm-hmm.
which has restructured its debt, I think, three
Nine
times in the
times.
last
Yeah.
9 times
Yeah.
overall, but 3 or 4
Yeah.
times in the last 20 years.
Yeah. Yeah.
It's almost, over and over again. And when you lose control of your destiny, it can create all kinds of political havoc. The prime example, obviously, is in the reparations imposed on Germany after World War I,
Mm-hmm.
which created hyperinflation and indebtedness that ultimately gave rise to a nationalist movement.
Mm-hmm.
And we do see smaller. I'm not suggesting that we're in 1933 again, but we do see nationalist movements rising around the world in a lot of different countries,
Mm-hmm.
and they are very anti-global. They're also a little bit, a very, very different tone in the way they go about doing things.
Mm-hmm.
And I think by being in debt, you invite that kind of instability, and I don't think we should take it lightly.
Mm-hmm.
But for an emerging country, it can be far more tumultuous. So I'm thinking of Turkey right now. I'm
Mm-hmm.
thinking of South Africa right now,
Mm-hmm.
where that linkage between politics and indebtedness is very, very close.
Mm-hmm.
Those Brazil. So those 3 countries kind of lead my list of worries in the emerging world in terms of their indebtedness, because they have that combination of potential for political instability as well as financial instability. All 3 countries have had a lot of capital come in from outside,
Mm-hmm.
and it can leave.
Mm-hmm.
Or if they try to keep it from leaving, I mean, the moment that capital controls are imposed, usually there's an admission of defeat. The currency gets beaten up, and it's almost impossible to raise more capital from outside the country.
Mm-hmm.
So I'm hoping, and maybe hope is not a strategy, but I'm hoping that economic recovery begins to take root so that these situations steer away
Mm-hmm.
from a very, very dangerous place. But I can't help but think that the full consequences of the pandemic are still being sorted out.
Mm-hmm.
I just don't think first that the virus has given up. It pops up over and over again. And I think that while countries have been able to maybe work their way through the last 6 months, they're not going to be able to work through another 6 months if conditions don't improve.
In terms of the looming global debt crisis, should economies fail to recover in the next, let's say, 3 to 5 years, would you expect a broad systemic debt crisis or an idiosyncratic one?
Well, that's a great question. I worked for the U.S. Federal Reserve from 2008 through 2012.
Okay.
So I was at the central bank during our last crisis. And it was amazing to all of us how something that happened in one place could affect so many other places.
Mm-hmm.
My favorite example was why did the big banks in Iceland fail, even though we had a problem in the U.S. housing market? It was because they owned U.S. mortgage-backed securities.
Yeah.
I don't think we know who owns all of the debt, let's say, that Turkey has built up. I mean, I've seen reports that a lot of European banks have made those loans,
Mm-hmm.
and that a lot of funds that are owned by a lot of investors around the world have exposure to Turkey and these other places.
Mm-hmm.
But unfortunately, you really have a hard time knowing exactly who is most vulnerable, so that you can figure out how the dominoes might fall. You know what I'm saying? Warren Buffett has a famous line that you don't know who's been skinny dipping until the tide goes out, right? And so this is what was happening in 2008, and I'm hoping it doesn't happen this time, because
Mm-hmm.
if we get one country failing in an idiosyncratic situation, you don't know how far it's going to go. Now, Argentina just had another debt restructuring, and at least for now, it doesn't seem to have carried over.
Mm-hmm.
I have to think that investors in Argentina debt are aware that there's a possibility that they may not get all of their money back, and so that at least has been ring fenced.
Mm-hmm.
But if you play out a scenario, let's say Turkey goes under, and it's felt that Italian banks have exposure to them, and let's say the Italian banking system gets under pressure, all of a sudden now you've got a big problem in the third largest economy in the Eurozone.
Mm-hmm.
And then what does Frankfurt do about all of that, the ECB? And, what kind of, so this is the other thing, Bostjan, that I would also point out that worries me. So international organizations that are supposed to take care of or manage through these situations are in a weak place right now.
Mm-hmm.
So the IMF probably does not have the capital it's going to need to offer financial assistance to everyone that's going to need it. And I know that China is trying to do more of that, but I think China is going to need its own capital because they have debt problems of their own.
Mm-hmm.
The World Trade Organization is hanging on by a thread. They're really unable to enforce almost anything because they don't have enough board members. The World Bank, other international organizations that keep the financial peace, if you will, are at a point where, especially if the problems end up being substantial, they may have a hard time keeping an idiosyncratic problem from becoming a global one. So it is not our base case, but I would say that if you're not at least thinking about what might happen if debt proves unsustainable, you ought to start.
What about the position of other biggest debtors, as the USA and Japan, for example?
So Japan does. Japan has by far the highest debt to GDP ratio in the world. It's about 250%, but almost all of that is domestically held.
Mm-hmm.
The United States, that is very democratically distributed. You will find U.S. Treasury securities all over the place. I think the Chinese own about 1.2 trillion, which is 10 to 11% of the national debt. You'll find it as a control asset in the portfolios of central banks and sovereign wealth funds around the world. So it is fairly democratically distributed, which is probably a good thing for the United States because there isn't one holder that is big enough that if they lost faith, that it would cause a correction in treasury prices. So look, I'm not proud of the fiscal position of the United States, but relative to other parts of the world, I am less worried about it.
Am I correct phrasing it like this? We will just need to get used to a lot higher levels of debt to GDP ratios?
I think that in the post-pandemic world, we are going to have to learn to live with higher levels of debt. But at the same time, I think all countries need to think very carefully about how to get their economies to perform at a higher level so that debt becomes manageable. Because as you probably know, those who think seriously about the debt problem, and Olivier Blanchard is one of them, he has this very simple formula, which is that as long as growth is in excess of the interest rate, debt is manageable. And right now, in most markets, G is greater than R. G is greater than R, since you're looking at me the opposite direction. But if we can't keep growth going, then it gets much harder to keep up with debt. And so this is where issues of investing in infrastructure, in human capital, in technology, and investing in the right kind of global trade and not turning your back on the global trading system, those are the things that I think are going to be very, very important in the next decade.
So spending the money as productively as possible.
Absolutely.
What will actually make a difference among countries in terms of tackling excessive debt? Is it willingness to of population to sustain pain? How much instability can we expect going forward? Are the governments likely to start paying people not to revolt?
Wow.
Sounds a bit hyperbolic, but
Yeah, it does. And
there
look,
are some signs going there.
if anybody, any person that you know who has ever gotten into debt and tried to get out of it, it can be a spiral.
Mm-hmm.
What we were talking about before in promoting, better economic outcomes is the most important thing we can do to avoid a downward spiral of debt.
Mm-hmm.
And that downward spiral isn't just financial, it's also social, as you've correctly highlighted.
What will make a difference in your view?
I think governments need to have plans that are appreciated by their populations,
Mm-hmm.
not just to foster stronger economic growth,
Mm-hmm.
but also growth that is felt by the full range of the population.
Mm-hmm.
In many countries, income inequality has grown, and those who feel like they don't have an ability to prosper are angry,
Mm-hmm.
and they vote for candidates that feed on their anger.
Mm-hmm.
And those candidates again are anti-globalization. They're anti-immigration in many cases, and they have platforms that ultimately may not be the best way of dealing with the debt and dealing with commerce. So I fault those who are fans of free trade for not making their case more strongly so that people can understand it, because those who don't like free trade, it's a very, very simple argument. Look, we'll stop trading, we'll make everything here, everybody will be better off. But that's wrong, because people will be paying higher prices for things. You may not be able to access some things at all. And you're much better off if you can be part of a global system. This goes all the way back to Adam Smith. As long as you're not selling some of your population, you're not ignoring some of your population as you try and get the benefits of globalization.
The position of China as the biggest lender to many countries, how likely are they to cash in on such position of theirs? And can we expect further deterioration of global trade relations, in your view?
So first, I would tell you that I have a very balanced view towards China. You have to admire what they've been able to achieve.
Mm-hmm.
And there are elements of their approach that I think deserve attention. But I think free trade has to be fair trade.
Mm-hmm.
And a number of countries, and again, before the pandemic, I traveled globally. I heard in a lot of world capitals, Bosjan, that they felt that China was playing unfairly. So it isn't just a Washington, Beijing. And so because they pushed everything to their advantage, they're now dealing with the backlash. The same is true with the lending that they've done internationally. You're familiar with the Belt and the Road Initiative.
Yeah, of course, yeah.
And that was their big program to not just build infrastructure that would help their distribution channels, but also to kind of win the hearts and minds in developing countries on whom they were somewhat reliant for natural resources, et cetera. But in some cases, the BRI loans have turned out to be very unfortunate. So Sri Lanka, Pakistan, a couple of the African countries have gotten near default on their debt, and they are saying that it was never going to be repaid, and now China's trying to seize their port, their infrastructure, and so there's a big backlash against BRI, in my view. And the best case in point, Khan in Pakistan actually reached out to the International Monetary Fund to take out the BRI loan, which is very, very interesting. So, of course, Washington said, well, I'm not going to make the Chinese whole, So in any event, imperial powers through the years have lent money in the hope of cementing their influence. China is no different, but I think that program is probably at risk now. I mentioned earlier, China's debt to GDP in aggregate has doubled since 2008. And that you're beginning to see more loan defaults, you're beginning to see more investment problems in China. And when you see a few things, here from our perch in Europe and the United States, you have to multiply that by 5 or 6 to know what's actually going on inside the country.
Yeah.
So I have a feeling that they're going to have to use their own internal resources internally. And so China's ability to bail out or bridge debt problems in the emerging world in the years ahead may be more limited.
How likely is a debt forgiveness conference to take place? Like like the one in 1932? Is this likely to be an orderly or a messy process in your view? The fact is that compared to debt restructuring instances in the 80s, we have vastly more diversified creditor communities now. Thousands of individual bondholders and such outside, which are outside of the regulatory pressure. What is your take on that possibility?
Very good question. So what I would tell you is I ultimately think that there are emerging markets where a debt resolution conference is going to be needed. Normally, the International Monetary Fund would be at the center of that. As I mentioned earlier, though, political and financial support for the IMF is not what it used to be. And so I worry that when the day comes to have that conference, I think you use the word disorderly. I think it has the risk of being much more disorderly than organized, and therefore the impact on financial markets could be much more substantial.
Northern Trust currently manages around 1.5 trillion of assets.
We have that's about right. Assets under management, I think. I'll check.
No problem. Speaking from the position of record stock market highs, how dangerous is the potential deterioration of assets as a spark for global debt crisis panic?
Well, as you know from following the news, stock markets are no longer at record levels.
But the valuations are still unprecedented.
Valuations are still high, and markets have done better than I would have expected, certainly over the last 6 months. But in the long run, you have to have some connection between economic performance and asset prices.
Yeah.
In the short term, they can be divorced, but eventually they have to reconcile. And right now, the divorce is larger than it is normally. And so we are watching, the risk of financial instability is certainly higher now than it was at the beginning of the year. And we're watching not just the stock market, but other asset markets, including for emerging market debt and high yield debt, for signs that things might not be stable.
Under an assumption of the successful vaccine sometime in 2021, what is the most likely outcome of the looming debt crisis in your view in a time frame of 5 to 10 years?
I hope that the projections of an effective vaccine come to fruition. I remind anybody who brings the subject up that making an invention, testing the invention, manufacturing the invention, and distributing the invention involve a number of steps.
Yeah.
And I think what people miss is that even if a test of a vaccine ends up going well, we're still a long way off from what is known as herd immunity, which really would provide a lot of comfort for people and businesses to go back to operating normally. But I hope that you're right. If that's the case, debt sustainability, I think, becomes easier
Mm-hmm.
if we are unable to achieve a broadly effective medical solution, both prevention and curative,
Mm-hmm.
to the coronavirus. The risk that we may lose control of our debt situation is much higher.
Mm-hmm.
So going back to where we started, this is where, while financial reporters and economists are not experts in biology,
Yeah.
haven't we learned a lot about biology in the last few months? And we'll have to continue staying current with that, because the course of the economy
Mm-hmm.
depends on the course of COVID-19.
Okay, great. Thank you so much for your time, Mr. Tannenbaum. I'm looking forward to our next meeting sometime in the future.
Terrific. I enjoyed the conversation also.